Good morning. Thanks, Gwen. Thank you to MIF. For the next 10 minutes, we'll talk about where we are at Troilus Gold and what the next year looks like. Just quickly to set the stage, what you're looking at is the old Troilus mine in the southern James Bay of Quebec. It operated for 14 years by Inmet Mining. It produced 2 million ounces of gold and about 70,000 tons of copper. Inmet was taken over hostilely by First Quantum. Not for Troilus, but really for La Cruces in Spain and Cobra Panama, which, as we've been following in the news, is probably helping Gwen's copper thesis right now. Won't spend a lot of time talking about why Quebec's good. In the back of your mind, remember that we have an active mining lease. This is a brownfield site that's going to be restarted. The resource has grown significantly. We've added over 12 million ounces equivalent over the last 4.5 years and about 350,000 meters of drilling. When I talk about equivalent today, think 80% gold, 20% copper. Feasibility study will be out momentarily. Team's done it before, and ESG is important. We have about 18 million in cash. We have 13 million coming back from the Quebec government. Thank you. In June. And we're now in the hotel business. The forest fires were terrible if you weren't Troilus. As the only remaining camp in the region, we have some neighbors moving in the next couple of weeks, and they're going to be giving us about $600,000 a month. Pays a lot of costs. We're about 70% institutionally held, of which almost 20% is Quebec government through Investment Quebec, the case, and FTQ. Equinox out of New York is our largest shareholder, and then Franklin and San Francisco. Management owns about 8%. I'm about 4% of that. Pretty well covered from the street, and there's a few more analysts that you'll see in the next few weeks come in. About $130 million market cap today. Not going to spend a lot of time at a high level. What you see in the bottom of the slide is the Abitibi, where 30 million ounces of gold has been produced historically, one of the most prolific gold belts in the world. We're in the Fort Ted Evans Green Belt to the north. Same rocks, same metamorphic grade, same age. We're buried by about 10 meters of till. Everybody else is exposed. So historically, there's been a lot less money spent on, call it the detached Abitibi. We have 500 square kilometers that we're actively exploring beyond just our development site. We had 1,500 about a year and a half ago. We sold 1,000 square kilometers to Sayona Lithium out of Australia for $50 million. And we've been running the company mainly on that capital. It was a great deal. We also hold a 2% royalty that they can buy back for $20 million. Blowing into the mine, I'm going to spend most of my time talking about the 4 development zones and what's happened there over the last couple of years, J87, X22, and Southwest. You'll see a lot of water in those 2 pits. 87's 300 meters deep, J is about 120 meters deep. There's 30 million cubic meters of water. It's not acid generating. A testament to the permitting regime in Quebec. Our EIA is done for dewatering. We're fully permitted. All the consultations are done. We're hooked up to hydropower. We bought $6 million of pumps and barges, and we started dewatering last summer to make sure we knew how to do it. We've partnered with the Cree, and as soon as the ice breaks up, which will probably be June, we'll actively be dewatering. We have pipes that will go out to that lake you see as part of a big river system. It'll take us about a year and a half. It's not a critical path item for us. More importantly, water is the single most important thing under any permitting process anywhere in the world. The fact that we can move that much water into the environment is a testament to, I think, the quality of the project, the quality of the work done by the team, but also the fact that Quebec is pro-development. We have a bit of an ace up our sleeve in the sense that 350 million US number you see was September 2020. So call it pre-inflation from SRK. We have a 120-man camp that's now a hotel, plus our team. We have site infrastructure and all utilities for up to a 1,400-man camp, which we'll need for construction. We have a 40-kilometer 171 kV line to site. 50 megawatt substation that we've upgraded, 40 kilometers of road that have been production ready. And the single most important thing we have is under these pictures is 6.5 square kilometers of fully permitted tailings. Our feasibility is going to be addressing a 35,000 ton a day plus 25-year mine life. It's a monster. We have 5 years of capacity without having to do a lift. Life of mine capacity after that. That would cost about, in today's dollars, in this inflationary environment, that would cost about $350 to $400 million to build, and it would take about 3 years to permit. So when you look at these large, low-grade, bulk tonnage deposits that are being built across Canada, our capital intensity is going to be significantly lower, not because our project's different, but because of the infrastructure that we've inherited and upgraded. The more we drill, the more we find. The grades come down every year, but that's really because we've been diluting the historic underground that's there. We'll be operating at the historic mine grade that Troilus operated at. Almost 350,000 meters of drilling over 4.5 years. And Kyle, who's in the back of the room and at our booth, has delivered one of the largest indicated resources in the world. 11.2 million ounces equivalent to 1.8 million ounces inferred. I just got to look at what our reserve number is going to be in our feasibility study, and I'm really excited that it's going to be backing a generational scale asset. I'm told this spins. I haven't seen it, but we'll see if it goes. But here's what it looks like. There it goes. We have 8.5 kilometers of almost continuous mineralization now. Inmet, this is really an experiment for Inmet. Inmet put this mine into production not because they wanted to be a gold producer, they wanted a gold multiple. And at the days when they went into, when they were putting this into construction, most gold companies were trading at real multiples that we don't see now, 2 times NAV, 20 times forward cash flow, and base metal companies were trading at 6 and 0.6. And so putting a gold copper asset into production, they were able to garner that multiple. It is a big asset with a big gap in the middle, and this is probably the better one. We pushed drilling almost another year, and it was very profitable for us in the sense that we discovered the X22 zone that was 45 meters of almost 5 grams from surface. We discovered the discovery zone, or the hinge zone, between 87 and J. Discovery there was like 175 meters of almost 2 grams. The key here, all of the drilling we've done, X22, 87, and J are forming one pit now rather than 3. That's going to significantly lower our strip ratio, provide way better access to the ore because there are some pushbacks involved. And we've identified 3 main areas in X22, the connector, and 87 South, where we can exploit significantly higher grade early on, pushing a higher grade through the mill, repay your invested capital as fast as humanly possible, drop your cutoff grade, and push tons. That is why Malartic and Detour are the 2 most profitable mines in Canada right now. Everything at Troilus is setting up that we can deliver that. The gap zone, 1.5 kilometers. We're just getting to it now. Growth, same. We've got lots of slides about how much growth there is. We compare 2020 and 2023 and the second panel down. You can just see a lot more color and a lot less gray. So bigger resource, lower strip, more profitable. The last minute I'm going to spend on this. These are all the dreamers. We're in here. These are all the companies in Canada that are gold, copper, that are basically going to build a mine, say we're going to build a mine, or are building a mine. Troilus stands out as the second largest undeveloped. Just take a look at Artemis at Blackwater. Blackwater is the exact same ore body. We're a little bit bigger, a little bit higher grade. But Mr. Dean's done an incredible job with a $1.2 billion company. They bought the resource from New Gold. Their feasibility is out. They are permitted. The EIA is done. They're funded, and they're halfway done construction. Troilus has spent the last 5 years getting to the resource stage. Over the next 12 months, our feasibility will be out in under a month. Our EIA will be submitted in May. The permits will start rolling out the end of the year and early 2025. We'll have our partner and or project funding mechanism in place. And we hope to be in a position to break ground in the middle of 2025, whatever number I tell you in 2025, 26, I'm wrong. But it's really just in the hands of the bureaucrats after that. So think about that Artemis valuation. I'm not going to say we're going to be a 10-bagger, but certainly I believe that delivering in these low-grade bulk tonnage deposits that are not sexy, it's about systematic de-risking. And everything we've done is really set up for the next 12 months. We have the cash and the team to do it, and we're in the right jurisdiction. Thanks, Gwen.